Good evening, everyone. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Wednesday, the 8th of December, 2021, about 6:40 p.m. Central Time. Sorry for not being here yesterday, but it is that Christmas season, and we get invited out to all these crazy dinners with business people, with friends, and so on at this time of the year, and I'm not saying no. Last year was rough enough, so every now and then I'll be missing being able to put out right at the holiday season some of these updates. It won't happen often because I try to schedule it where I can get these done and out, but there was no way we could do it yesterday. These things began at about 3 in the afternoon, 4 in the afternoon. All right. Tomorrow you're going to have CPI number. That's what we're all going to be looking at. How hot is it? Middle of the week next week, you're getting the monetary policy statements. We've already seen that the Bank of England, they've been neutered, if you will. They wanted to raise interest rates was the word. The markets were trying to price it in. But now that they've had to go to a plan B where now they've told people in the UK, stay and work from home. They're reverting back. They have no choice because of the onslaught of how many people are getting the COVID there, the newest version. We also have tomorrow the supply-demand report in grains. That's going to be a big number, and traders will be all focused on that tomorrow. And we write about all this. You know, I want you to remember, before I get too far here, that one of the things we do is we write a lot of information during the day, whether you're a futures trader, an options trader, or a spread trader in the futures markets, we're covering it. And it's throughout the day, so it's not one report during the day. You're going to get a lot of information. We'd like to show you basically what we do. So if you're interested in this, just go to our website, www.iraepstein.com. At the very top, you'll see free offers. You get all this information, and we can tailor what you want. If you don't want it on everything, we can tailor what you want for a trial. So how do you do it again? www.iraepstein.com. Enough of that. Let's go back now and finish up on the markets. So it's been a whipsaw market, but here's what I think the market has decided. I think the market has said that the Omicron for the United States is a big non-event in this sense. And this is the key. If you have the shots, even if you get COVID again, the shots don't stop you from getting COVID. That's not what they do. They stop the severity of what you get. Do we understand that? So the onslaught of Omicron is coming. I mean, all you got to do is look at the data, what's happening in Europe, and we're about 4 to 6 weeks behind them. It's rushed there. I've just told you about England. It's coming here. But for those of us that have had, especially the 3 shots, according to the Pfizer people, we should be pretty much in the clear. We might get it, but we're not going to be. Number one, the risk of death is very small. The risk of being hospitalized is very small. That's the good news. The market's digesting that. If this turns out to be true, then you got to think about what's it mean for manufacturing, the supply chains around the world. I mean, 2-3 vaccines and you got it. So that starts protecting things. You've got to build that into your mental psyche. So as we take a look at the S&P, you've come up on a weekly basis. What are you, from the highs, are we 15, 20 points away from an all-time high? You have to admit this market has returned into that area. And you see that right here. Now, that doesn't mean it can't fall back and then go again, but I do think, and I went on and I told you, I think this is going to be the year of the Santa Claus rally. It's going to take something that I don't see on the horizon for me to think that won't happen. Could it be the variant gets worse and blah, blah, on Omicron? It could, but that's not what I'm hearing at this point in time. The market's into the resistance zone. It's fighting its battle here, as it should, and it doesn't have to go through it 1, 2, 3. I'd prefer the market backs off a little bit so you get a charting pattern. This is a difficult pattern. When you make a low like this, every day you're making a higher high. How do you come in on a break? Any break you buy of meaning might be an outside day down. That's not the smartest thing. So the support, as I'm reading it, in the S&P is probably back in the 46 area. The bias is up. The trend is down. That's a big nothing in the market. In other words, the two are fighting each other, and you're overbought. You're not embedded. I don't know what to do with the chart like that. When you get to the NASDAQ, you have a lower low and immediately a higher high, so you're not in a trend. Momentum's pointing up, not overbought, and the bias is up. But again, it's not a trend. I think you're really caught between the upper band and the lower band and doing one of these. When you look at the Dow is the one that fell apart with the Russell. It went down to the 200-day average, found its support there. We had talked that maybe it would find it back here when it was breaking. It went down further, and now it's gotten high enough to take out the old high back here. You're no longer in a downtrend, but is that an uptrend that you can trade? I doubt it. In the Russell, the battleground started, and I'll take you back because I wasn't here. I was expecting that if you rallied, and this is what I was saying, I thought that you'd have trouble at the 200-day and the 100-day moving average. And if you can clear those, get over them on a settlement, maybe you can make a run to the 18-day average of closes. To do that, you break the downtrend, which you did, and this is what you're doing right here on the close today, and this is tonight. So I think the analysis I gave you was right on the money. But you need to close over the 18-day average. And even then, would you want to buy it at 22.81 with a stop all the way back at 21.50 or so? I don't think so. In the VIX cash, finally it pulled back to the 18-day average. And one of the things I've been saying is I'm questioning if the market's going to be going for these lows again in the 15 area. Now you're back to a 1990. Are you going to do that? Well, we'll find out. If it breaks first, obviously the support's the combination of 1893 to 1887, but this thing's going to go one way or the other pretty good tomorrow once it sees what inflation looks like and how it's going to handle that. Already traders are talking, well, was that the peak of inflation if it's a big number? I'm not going to get into that. Let the market tell us. The 30-year bond still under pressure, falling back to the 18-day average. One of the things I tell people is when you get neutral like this in front of a big report, why are you playing? Might be the best thing to just walk away from the market. Same thing in the 5-year. You know, here you are. I'm sorry, the 10-year. Here you are back to the that. I think that it's neutral. I think smart money's going to go to the sidelines and see what happens. Even the dollar left its uptrend today. Higher lows, higher highs coming in. You were flattening out momentum, and then you fell apart. It's been a son of a gun week trying to trade currencies because you've had a vertical price rise in the euro. It just took off on the past 48 hours, and the market is suddenly no longer in a downtrend. The question is, can it be in an uptrend? And it's not yet. And in the British pound, as I mentioned, the Omicron is so terrible there that Prime Minister Johnson has gone to what he calls Plan B. So this means if you're going to go to, a venue where there's a lot of people, let's call it a concert, a club, whatever it is that people go to, you're going to have to bring your vaccine card. But for workers, he doesn't want them in the workforce. He wants them to work at home again, and that is Plan B. So that now destroys what? The Christmas shopping, the office space, the office parties. Now think of all the ramifications that has in the economy. It's certainly not good. In Bitcoin, you're down here and sort of stabilizing at the what? At the lower Bollinger Band. This was the washout week. Remember, you did get on some of the exchanges, the bigger ones, near 43,000. One exchange on last Saturday got down to $28,000 or $29,000. I thought that was an aberration. Brent versus WTI crude, well, the whole market's come alive, and now if you take a look at these numbers, you're right back to the 100 and the 18-day average. This is the resistance point. Right there in all of them. You climbed back up across the board right into resistance with the exception of nat gas, which is still bearish. You know why? It's warm. Chicago, that's why I'm wearing this. We've been in single digit and then into the 20s, but we're going to be near 50 in the next few days. I was just reading in Colorado, if you go to some of the resorts, Steamboat Springs, there's no snow. This is the season. You bring the families there for the snow. It's too warm, and I don't even think they're making the man-made snow there. So you have a lot of problems in America that we're warmer than we should be, and it's really creating a lot of havoc, things you got to think about. Remember our market research, just go to our website, top left, sign up for it. I'm Ira Epstein. I'll see you tomorrow.